Boring, maybe. Profitable, most definitely. Now, if it feels like Groundhog Day, you're not alone. The bear moves are, well, they're grinding lower again, with the S&P stair-stepping lower slowly but surely. Yesterday's attempt just seemed like an excuse for the market to bounce and rally on delays with the trade war, tariff, thingamajiggy-mig. And basically, my bearish positions are just waiting to hit their profitable exit conclusion. So it's a case of feet up, drink a cup of tea, and wait for that profit. Anyway, let's look at the charts. Stay tuned right to the end for a fun stock market fact. Now, the markets have been stair-stepping lower, as we can see here. We've seen the markets go sideways briefly and then continue that bear breakout move. And we've seen more of a definitive bearish breakout just here. And, you know, I have been bearish for most of this movement, and it's quite nice to see. But unfortunately, we could be looking at price just meandering sideways around this level again. It does seem quite a common occurrence that after we've seen an interesting average day's move, should we say, a good push lower, then we tend to meander sideways for a day or two. We might see a little bit of a bullish reaction. We haven't as of yet been able to reclaim the middle of the Bollinger Band. The way I've got mine set is the 50-period moving average, and it just gives me that nice benchmark there. So we have been just staying in that lower portion. So I would imagine that we're going to continue with that for the moment. But in the short term, that does give us that sideways scenario just before we see that potential for the next drop lower. So that's just what I'm anticipating for the moment. I'm remaining bearish, a little bit of sideways first, but hopefully we should see some profitable exits by the end of the week on at least half of my positions. Now, as always, let's not forget about the bullish scenario. We could be looking at the resumption of the overall bull trend. I don't think it's going to be anytime soon. I'm waiting for 58.50 before I'll consider a bullish trade at the moment. I will reevaluate should we see this sideways market continue, and that might mean I can redraw my bull and bear triggers just so that they make a little bit more sense with the most recent price action. ADD again is not giving us any clues. It's staying in that middle ground. If we do by any chance get up to that relative high or even a bullish extreme, that could be a nice indication for us to be thinking about the bear move lower. Again, the overall big bull target based off the daily chart is still 52.55, which is essentially if we look at the top left here, we've got the larger expanding triangle, which we looked at earlier in the week. That's officially broken out, as we discussed, and that gives us that breakout target just there. We're officially also in correction territory. We are 10% lower since the attempt at the new all-time high. It's not necessarily a crash again. Normally you'd see a big crash / corrective movement would be 10% in 10-15 days. We're in that 20-day mark, so this is a slow, lazy bear move. I'm not really too worried about it. VIX is not necessarily popping off the handle that would suggest everyone's losing their minds. So again, I'm not overall worried that we're about to see another 20% fall off and the market to suddenly crash. So just stay tuned, wait for your levels. Again, I'm currently bearish and I'm looking for the next buying opportunity. In a perfect world, down at 5,300 with the target reached, but let's not discount the possibility that it might not get there, and we need some bullish options should / when they get there. Here's a fun stock market fact. Did you know in 2008, Porsche trapped hedge funds in one of the greatest short squeezes in history, briefly making it the most valuable company in the world, and all thanks to a stock market maneuver? Now, the markets don't just move up and down, they can also turn traders inside out. We've seen this a lot in the GameStop, the meme stock, in that post-2020 world that we currently live in. You know, we've seen that short squeeze quite a lot. Now, the bet can go wrong if you are trying to attempt that short squeeze, so just remember to have your lines in the sand, as we said earlier, have your triggers to exits so that you don't get caught on the wrong side of what could be a short squeeze if it's not going your way straight away, and it'll keep you on the right side of trades. So if you're tired of watching the charts all day and want to learn a simple process that actually works to profit in any market condition, then click the link next to this video and you'll be taken to a free training that I recently held, which outlines one of my favorite money-making patterns. So click the link and I will see you over there.